In this video, we introduce you to a tax return statement template found in our Tools for Justice document library. Membership in Tools for Justice is free, where we teach each other how to become smarter and stronger by learning to use legal tools to stop protesting and start prosecuting. Subscription to our document library costs $25 per month, where we provide ongoing development of innovative legal templates for seeking legal remedy, including through civil RICO, against control frauds and racketeering in government, banking, insurance, telecommunications, energy, transportation, agriculture, education, health, nutrition, pharmaceuticals, medicine, debt collection, the legal profession, and other heavily government-regulated industries. This is a big job, so we are starting with a few of our largest control fraud and racketeering problems to solve them before moving on to tackling others, one project at a time. The memorandum portion of the return statement is a sort of Rosetta Stone for interpreting the federal income tax laws as applied to individuals. The memorandum is the result of 7 years full-time litigation against the U.S. Department of Justice Tax Division by a team of pro se litigants who are seeking tax return refunds and remedy regarding IRS lien and levy issues. The federal employment tax statutes are written in an intentionally confusing manner with the objective that we never understand these statutes, which is evident upon trying to decipher them without the help of this memorandum. In fact, deciphering the code would have never been possible were it not for the invention of modern computer and internet database search tools. While litigating against the DOJ, we uncovered the Hilton case of 1796, which was the very first federal tax case to go to the Supreme Court and the most important tax case in the history of the United States. Hilton is unique in that it was a contrived case arranged from its inception by framers of the Constitution who wanted to test the central government's newly granted powers of taxation. Hilton is also unique in that the Supreme Court justices at that time were all appointed to office by George Washington, who also appointed Alexander Hamilton to his Secretary of the United States Treasury position before he became the U.S. Attorney who represented the United States before the Supreme Court in Hilton. The Hilton case involves the carriage tax, which was an annual use tax on carriages that is similar to the modern automobile registration presently imposed by state legislatures. Alexander Hamilton, who was both a framer and signer of the Constitution, fully argued the issue of direct and indirect taxation under the Constitution before the Supreme Court. The Supreme Court at that time included the Justices Wilson and Patterson, who were also framers and signers of the Constitution. The Supreme Court was unanimous in agreement with Hamilton's argument on behalf of the United States regarding direct and indirect taxation under the Constitution. The Hilton case was poorly reported and suspiciously buried in the basement archives of the Library of Congress for over 200 years until Maeva Marcus and a team of legal researchers unearthed the Hilton case documents and published them in the Documentary History of the Supreme Court of the United States, 1789 to 1800, Volume 7, Cases, 1796 through 1797, by Columbia University Press in the year 2003. In the year 2007, through legal research in support of our litigation against the DOJ, we discovered the documentary history involving the Hilton case, which facilitated our fully cracking the Internal Revenue Code in the year 2011, but only after investing thousands of hours into researching the code and case law with modern computer database search tools. Now that we have cracked the code, we are presenting our findings via the following memorandum to everyone who is interested in learning the truth about the federal employment tax laws. Our government officials can pontificate and spin all they want, and we may love them, but if they violate the law by operating the government as control frauds, we will prosecute them. Based upon our understanding as presented in this memorandum, we are writing a civil RICO complaint against the IRS and DOJ criminals who have been conspiring among themselves and federal judges who have been aiding and abetting them to systematically misapply federal employment taxes to our pay. We would like to bring in 70 million plaintiffs against the crooks who have been stealing our pay through theft by deception, extortion under color of law, and racketeering within the executive and judicial branches of government. Dr. Paul is our inspiration. We are the revolution. We are the legal revolution. In support of our cause, we have created a new word, Ballarat, which means building an army of legal activists restoring the American dream. We invite you to join us. Now on to the memorandum. The tax return memorandum template begins with a title and a table of contents. The memorandum is comprised of the following components: introduction, statement of the issue, statement of facts, summary of federal income taxation with respect to employment from a federal constitutional perspective, the rules of statutory construction, federal constitutional taxation, federal income taxation with respect to employment, conclusion, and a jurat, which makes this statement your sworn testimony in support of your tax return. As we scroll down here, we come to the introduction. This memorandum is an integral part of your such and such tax return or statement. The IRS Form 1040 is referenced herein for the purpose of explaining the applicable law. However, the same law substantially applies to the IRS Forms 1040A, 1040EZ, etc. The terms Internal Revenue Code, IRC, and 26 U.S.C. are used interchangeably. This memorandum does not challenge the validity of any statute or tax, but merely seeks to enforce the federal taxation laws as written and interpreted in accordance with the United States Supreme Court case law precedent on federal constitutional taxation and the rules of statutory construction. The need for this memorandum arises out of IRS systematic misapplication of federal employment tax provisions of the Federal Income Tax statutes to individuals who are not engaged in employment as defined in IRC Section 3121B. Instead of adhering to Section 3121B by observing the material facts corresponding to Section 3121B, the Commissioner of Internal Revenue routinely asserts the following legal argument as justification for an unconstitutional IRS policy of treating all that comes in as statutory gross income. Quote, Section 1 of the Internal Revenue Code imposes an income tax on the taxable income of every individual. Taxable income is calculated by first determining gross income, defined by IRC Section 61 as all income from whatever source derived, including compensation for services, and gross income received from business. Taxpayers then subtract allowable deductions to arrive at adjusted gross income, IRC Section 62, and finally taxable income, IRC Section 63. The Commissioner's interpretation of Section 61 does not conform to the U.S. Supreme Court case law precedent on federal constitutional taxation and on the rules of statutory construction, and improperly attempts to override the definitions in Section 1402 and 3121, which control the meaning and scope of Section 61, as well as the proper accounting of federal income tax liabilities involving the subject of employment as defined in Section 3121B. Statement of the issue. The specific issue which this memorandum addresses is whether I received remuneration during the year such and such from such company, which is properly reportable on the IRS Form 1040 as remuneration from employment as defined in IRC Section 3121B, taken together with the complementary definitions for state, United States, and citizen found at Section 3121E, American vessel and aircraft found at Section 3121F, American employer found at Section 3121H, and international agreements found at 42 U.S.C. Section 433, which is Section 233 of the Social Security Act. In the statement of facts, we state facts about ourselves which correspond specifically to employment as defined in Section 3121B. These statements of fact will mean more once you understand the definitions themselves. Summary of federal income taxation with respect to employment from a federal constitutional perspective. Article 1, Section 8 of the Federal Constitution grants Congress full powers of taxation within the limits expressed in Section 9, which state, no capitation or other direct tax shall be laid unless in proportion to the census or enumeration hereinbefore directed to be taken, and no tax or duty shall be laid on articles exported from any state. In plain language, Section 9 expressly prohibits Congress from directly taxing the income or pay of individuals without apportioning the tax among the states according to their population, and from taxing exports. Throughout the entire history of the United States, Congress has imposed a direct tax only a few times: in 1798, 1813, 1815, 1816, and in 1861. All of these direct taxes have long since expired. The following parameters of federal constitutional taxation were fully argued and settled in Hylton v. United States in 1796. A. Article 1 of the U.S. Constitution divides federal taxation into two classes, direct and indirect. B. The constitutional reference for distinguishing a direct tax from an indirect tax is how the tax falls on the income of the individual. Direct taxes consist of a capitation tax and a tax on land. A capitation tax falls immediately on an individual's revenue or wages of labor. E. Indirect taxes are circuitous modes of reaching the income of the individual. F. Indirect taxes fall on activities or events usually associated with expenses or consumption. The 16th Amendment did not repeal or modify Article 1 or authorize any new type of tax. See Brusherber v. Union Pacific Railroad in 1916. Quote, "The contention that the amendment treats a tax on income as a direct tax, thus destroying the two great classifications of direct and indirect taxation under the Constitution, is wholly without foundation." In Stanton v. Baltic Mining, which is 1916, in fact, the Supreme Court settled Stanton v. Baltic Mining Company the afternoon after ruling on Brusherber. So here's the quote by Supreme Court Justice Edward Douglas White, who rendered the decision both in the 16th Amendment and in Stanton. By the previous ruling, Brusherber, it was settled that the provisions of the 16th Amendment conferred no new power of taxation, but simply prohibited the previous and complete and plenary power of income taxation possessed by Congress from the beginning from being taken out of the category of indirect taxation to which it inherently belonged. In addition to the fact that the 16th Amendment did not actually amend anything, it does not have any enactment clause or implementing regulations or budget for implementation. Thus the amendment is in name only and is merely a philosophical statement made by Congress with the object of restraining the Supreme Court from viewing an income tax as a direct tax because of its close effect on the underlying property, as it had in Pollock v. Farmers Loan and Trust in 1895. For these reasons, the United States Supreme Court reads the 16th Amendment in light of Article 1, Section 9. For example, see Wright v. United States in 1938. Quote, "The Court has hitherto consistently held that a literal reading of a provision of the Constitution which defeats a purpose evident when the instrument is read as a whole is not to be favored. From whatever source derived, as it is written in the 16th Amendment, does not mean from whatever source derived." In accordance with the basic principles of federal constitutional taxation as set forth by the U.S. Supreme Court in Hylton, all taxes presently found in the IRC are indirect taxes, meaning circuitous modes of reaching the income of the individual. Thus, the statutory language in the IRC must be strictly construed in conformity with the parameters of indirect taxation so as not to run afoul of the federal constitutional prohibition against Congress imposing a capitation tax, meaning a direct tax falling immediately on an individual's revenue or wages of labor, unless Congress apportions the capitation tax among the several states according to the census. U.S. Constitution, Article 1, Section 9. It is in this constitutional context that IRC 1 imposes a tax on, which in the Code always means with respect to because of the constitutional limitation in Article 1, Section 9, taxable income. So I'll read this again. It is in this constitutional context that IRC 1 imposes a tax with respect to taxable income. IRC Section 63 defines taxable income as gross income minus statutory deductions. The duty to make a federal income tax return arises only if an individual is in receipt of gross income equal to or exceeding the statutory exemption amount, together with a basic standard deduction for any given year. IRC Section 6012. Under the Constitution, the legal meaning of the statutory term gross income, as used in the Internal Revenue Code and defined in Section 61A, is limited to profit or gain or income derived from a taxable source, and does not and cannot mean gross receipts without violating Article 1, Section 9. In accordance with the parameters of indirect taxation, a taxable source is an activity or event that is the subject of a federal tax. Hundreds of taxable sources are defined throughout the Internal Revenue Code. Whereas a taxable source is the subject of a federal tax, the income derived from the taxable source is measured as the basis for determining the amount of tax. The Section 61A definition for gross income is prefaced with an exception clause pointing to other provisions in the Internal Revenue Code that supersede Section 61. When Section 61A is properly read in the context of the Constitution, it means A. General definition. Except as otherwise provided in the subtitle, gross income means all income for whatever federally taxable source derived, including, but not limited to, the following items. 1. Compensation for services as defined in Section 3121B. 2. Gross income derived from business as defined in Section 1402C engaged in employment as defined in Section 3121B. And the list of examples go on, but they all have a code definition controlling the examples, or the meaning of the examples that are given in Section 61. The Treasury regulation at 26 CFR Section 1.61-1B clarifies the meaning of Section 61A by stating that when another section of the Code or of the regulations thereunder provides specific treatment for any item of income, that section shall apply notwithstanding Section 61 and the regulations thereunder. Quote, to the extent that another section of the Code or of the regulations thereunder provides specific treatment for any item of income, such other provision shall apply notwithstanding Section 61 and the regulations thereunder. Unquote. Literally all items of income in the Internal Revenue Code that are the subject of federal taxation receive special treatment by way of definitions. Therefore, when accounting for federal tax liabilities, it is necessary to read the definitions accompanying each section of the IRC that imposes a tax and to apply these definitions to the material facts in order to determine whether or not the item of income in question is derived from a taxable source. IRC sections 1401, 1402, 3101, and 3121 provide specific treatment for the following items of income: net earnings from self-employment, self-employment income, trade or business income, and wages as follows. Section 1401, rate of tax. Title 26, Subtitle A, Chapter 2, Section 1401. Statute. A. Old age, survivors, and disability insurance. In addition to other taxes, there shall be imposed for each taxable year on, meaning with respect to, the self-employment income of every individual, a tax equal to the following percent of the amount of the self-employment income for such taxable year. Section 1402, definitions. A. Net earnings from self-employment. The term net earnings from self-employment means the gross income derived by an individual from any trade or business. B. Self-employment income. The term self-employment income means the net earnings from self-employment derived by an individual as provided by an agreement under Section 233 of the Social Security Act during any taxable year. C. Trade or business. The term trade or business, when used in reference to self-employment income or net earnings from self-employment, shall not include the performance of service by an individual as an employee other than, i.e., shall include the performance of the general class of, and they give examples A, B, C, F, and G, service as described in Section 3121B, and they give this big old long list, and it's confusing what's in there, but they do reference repeatedly Section 3121B. D. Employee and wages. The term employee and the term wages shall have the same meaning as when used in Chapter 21, Section 3101 and following, relating to the Federal Insurance Contributions Act. Section 3101, rate of tax. Title 26, Subtitle C, Chapter 21, Subchapter A, Section 3101. Statute. Old age, survivors, and disability insurance. In addition to other taxes, there is hereby imposed on, meaning with respect to, the income of every individual a tax equal to the following percentages of the wages as defined in Section 3121A received by him with respect to employment as defined in Section 3121B. Recognize this? Section 3101. You scroll back, you go to Section 1401. It's the same tax, the same Social Security tax which imposed, and they use slightly different language, but it's imposed twice in the Internal Revenue Code. Once in Section 1401, and the same tax is imposed again in Section 3101. So you go on. The items of income defined in Sections 1402 and 3121 as net earnings from self-employment, self-employment income, trade or business income, and wages are all part of the Old Age, Survivors, and Disability Insurance Tax codified in Subtitle A at Section 1401 and Subtitle C at Section 3101. The Subtitle A definitions provided in Sections 1402B, C, and D explicitly rely on the Subtitle C definitions in Section 3121 to complete their meaning. The Federal Insurance Contributions Act, FICA, uses the term United States in a geographical sense, as specifically defined by statute, standing opposed to the constitutional sense, meaning the several states. See Xianlijiang Guminlu Baohua He v. United States. This is a Federal Circuit appeals case in 2011. Quote, "We conclude that the Court of Federal Claims did not legally err in its determination that the FICA statutory scheme uses United States in a geographical sense." In other words, they got it right. The definitions for state, United States, and citizen found in Section 3121E include the general class of the District of Columbia, the Commonwealth of Puerto Rico, the Virgin Islands, Guam, and American Samoa, but expressly omit the 50 states to limit the scope of employment as defined in Section 3121B to conform to the restriction imposed on Congress at Article 1, Section 9. Section 3121B defines employment as service in various jurisdictional and contractual relationships to the state, United States, and citizen as defined in Section 3121E, taken together with the complementary definitions for American vessel and aircraft found at Section 3121F, American employer found at Section 3121H, and international agreements found at 42 U.S.C. Section 433 as follows. Section 3121 definitions. A. Wages. For the purpose of this chapter, the term wages means all remuneration from employment. B. Employment. For the purposes of this chapter, the term employment means any service of whatever nature performed A. by an employee for the person employing him, irrespective of the citizenship or residence of either I. within the geographical United States as defined in Section 3121E, II. on or in connection with an American vessel or aircraft as defined in Section 3121F, under a contract of service which is entered into within the geographical United States as defined at Section 3121E, or during the performance of which and while the employee is employed on the vessel or aircraft, it touches at a port in the geographical United States as defined in Section 3121E, if the employee is employed on or in connection with such vessel or aircraft when outside the geographical United States as defined in Section 3121E, or B. outside the geographical United States as defined in Section 3121E by a citizen or resident of the geographical United States as defined in Section 3121E, as an employee for an American employer as defined in subsection H, meaning an employee performing service for the United States or any instrumentality thereof, including for any individual or entity subject to the jurisdiction of the District of Columbia, the Commonwealth of Puerto Rico, the Virgin Islands, Guam, or American Samoa, or C, if it is service, regardless of where or by whom performed, which is designated as employment or recognized as equivalent to employment under an agreement entered into under Section 233 of the Social Security Act, meaning working under an international Social Security, old age survivors, disability, or derivative benefits agreement according to 42 U.S.C. Section 433 international agreements, i.e. taxation by treaty. Isn't that nice? The items of income defined in Section 1402 and 3121 are merely different names for remuneration from employment as defined in Section 3121B. In accordance with the parameters of indirect taxation under the Constitution, employment as defined in Section 3121B is the subject of the Old Age Survivors and Disability Insurance Tax codified as Sections 1401 and 3101, and all remuneration from employment is the basis for determining the amount of tax. The material facts corresponding to these definitions, providing specific treatment for these items of income, determine the proper accounting of remuneration on the IRS Form 1040 in accordance with the basic principles of federal constitutional taxation. This concludes video 1. In the next video, we will cover the rules of statutory construction. Thank you from Tools for Justice.